Hi, this is Marc with your analysis for the week commencing the 29th of September. When I started to learn how to trade Forex late 2002, I based everything that I did simply on technical analysis, in that we were looking for moves, candlestick formations, EMAs, etc., and that is what influenced me to take a trade. Since the crisis and the meltdown 2008-2009, I have started to pay more attention to the news, and certainly in the last 18 months even more so. And that's partly why we've added Fotis to the group, because Fotis studies before he takes trades. He does fundamental analysis and then uses the technical analysis for his entries. Therefore, the reason for the long preamble is that the Euro USD, for example, on a weekly chart has just broken 78.6 fib of a weekly move. The Bollinger Band is open, and therefore there's lots of clues that the euro is going to continue to fly up. But there's two things to bear in mind here. One is that personally I believe that 13700 and 12800 are the areas that the Fed and the ECB between them have agreed that the price of the euro dollar will stay at. And then from a fundamental point of view, you have the issue at the weekend. The Italian Prime Minister Berlusconi, who should be in jail but he's too rich to go, has withdrawn his members of parliament, and the Italian government has collapsed. And then, of course, we have the ongoing saga of the Republicans and the Democrats arguing over the US debt ceiling. Are they going to agree? Of course they are. Are they going to play games with the American economy, reputation, and all the rest of it? You bet they are. So we have off stage so many things going on that although technically we would suggest it's now time to go long, you need to be careful. And for example, if we go back to the Euro USD on a monthly, I showed you how technically this month and this candle, if this candle closes anywhere around here, this is a monthly breakout, which does suggest a 900 odd pip, 2000 pip move up. Bollinger's opened, everything is saying woohoo, off we go, and yet I am just a little bit wary. So the more conservative method for me is as follows. If price pulls back to the monthly 55 EMA, and you've got all this confluence going on here, you've got EMAs, you have fibs and previous support and resistance, then I would be interested to long this pair. I won't take it in its current position because of this off-stage activity. But if it was to pull back here, the great thing, of course, if we got a gap at the open and it was a big gap, then this would definitely be the area I would be looking to enter the trades. But for me at the moment, that is what I will be playing at with the Euro USD. If you go down to a daily and you're going to trade it intraday and sit there and watch what's going on, previous weeks we had this major area of previous support and resistance. That has now changed, and if you have a look here for the last week, we had support at 34.65 area. So if you're going to trade it intraday, look for entries on pullbacks here. Again, the Bollinger's open. Everything suggests we're going up here, but just that word of caution because of what is going on in the political arena. This is the British pound. Now, I do think the British pound, of all the currencies at the moment that I deal in, I do think that the pound fundamentally is most likely to strengthen over everything. However, the Brits won't want their currency too strong either, but we have had a breakout here. So we had a breakout on a monthly. This was a major move. This is a monthly candle here, and at the moment we could even be closing up above the monthly 55 and monthly 78.6. So there's a lot of reasons here why we're thinking in terms of going long. Once again, the more conservative entry would be a pullback down here around 159.50. It did it last week. Had you traded this off the weekly, previous week broke and closed above. Last week came back down, touched the 200 MA to the pip and promptly moved away hundreds of pips. So that would be the conservative entry. In between, you need to be looking at the 55 on a monthly, and obvious one is 160, and it did it for the last 7, 8, 9 days. Each time prices come down, we have had a nasty spike, but in general 160 has held. Therefore, I will be interested only in pullbacks at the moment. If we get a break and clear close above 161.50 and the Bollinger stays open, I will then be interested in a breakout pullback with a continuation move up. So the euro pound, I said the other day, I believe that the euro will fall against the British pound in the run up to Christmas. The difficulty was and still is, and look what's happened. I said to you a couple of weeks ago, I wouldn't short in this area because I felt that this weekly 200 was going to be too strong, and for 3 weeks running it has bounced off there and it has bounced back down off the 200 on a daily. So the ways to play it for me are pullbacks to the 200 on the daily. Also, I'll sit and watch this on a 4 hour. So I'm going to watch these areas here, but all I'm interested in at the minute is a short on this pair. The other option, I'm not going to take it here because it's just too small a gap before you then hit the beast of the 55 EMA on a monthly and 8300 and previous support and resistance. The final option here is if we do break and close below 8300, I then want to pull back with a view to a short, and I think that this could be a substantial move up to Christmas. Of course, on the other hand, I could be completely wrong and it may go and shoot the other way, but I just feel it in my water. This is the Aussie dollar on a monthly chart, and you can see how we had a major fall from the start of the summer and the price came down to 8,900. Now at this point here, a few months back, I said to you, look, yes, we've broken 90, it's a major substantial area, but at the moment, contrary to all the technical indicators, I would be more interested in a bounce back up. And as it was, this bounce back up 500 or 600 pips. It was a clue that we were outside the Bollinger. It was previous support and resistance. So this is classed as a bit more of a swing trade, but it's because of the fact that it was such major support and resistance and we'd had this big drop that I felt that that was the way to play it. And what I've said to you in the past is look on smaller time frames for clues. So for example, if price comes down to an area and starts to meander sideways like that, and it did it before down here, then I start to look for candlestick clues for taking what is a counter trend trade. But it worked well on the Aussie dollar the previous months for hundreds and hundreds of pips, and I'm going to show you something on the Swissy in a minute for that. Now the Aussie dollar itself is a bit confusing at the moment. We've had this big fall and then we've had the big pullback and the move up. We've now got a 5-8 cross down, stochastics, now everything's suggesting down, and yet we've got these EMAs have rolled over. I find this all a bit messy for me. 9400 will be of interest to short, but my overall bias for this pair, I think that this is more likely to go up than to go down. As I say, we could be in for some real fireworks this week. If it did for any reason fall down to 8900 again, I would definitely be looking in terms of a move back up. And in terms of clues again, even on a daily chart with this Aussie dollar in July, you had this pin bar reversal candle at 8900, which again would have given you hundreds of pips of movement. So this is the dollar Swissy. Now the dollar Swissy is currently coming down to 90. The bottom Bollinger Band has opened, the stochastics have rolled over, everything is screaming on this that we're on for a move down. But 90 has been a huge previous area of support and resistance, and if the euro is being manipulated and the euro is to drop, then this is more likely to go back up again. So just as I've shown you with the Aussie dollar, go down to smaller time frames and look for clues and look at the market open. Again, if this gaps to 90 at the market open, I will long this back up. The more conservative method of this is to wait for a pullback all the way back up to this region with a view to a short. I would not short in its current position. And if it does break and close below 90, what I will do is wait on a daily chart for price to clearly break and close below, and I want it to break 25, 35 pips below 90, then a pullback, then a short, but not in its current position for me. Now, another interesting thing on this dollar Swissy, many weeks ago we were looking at a potential head and shoulders pattern. Now it did get very messy, but this was the neckline and it has now broken, so it could be that we're on for a big move down. But as I've just said to you, I would need price to clearly close below 90, then pull back, then a view to a short. Dollar yen. Now, the dollar yen, this is another one where Fotis was saying the other day that he felt that the Japanese government would intervene. I think they already did last week, the week before with FOMC. And what they've done basically is they want their currency to weaken because it will help their exports. And they have done this on a number of occasions in the past. The most spectacular recently was last year when I'd said to members, when price got down around 7,700 and it'd been dropping like a stone at this point. We'd had a major fall, I think it was from 90. But at this point down here, what I'd said was I would be looking, even though it's strongly counter trend, for a move back up. This went thousands and thousands and thousands of pips, and it was all started by the Bank of Japan. I think they did it here the other week. This was, as I said, FOMC. Price started to drop. So what the heck do you do with it? Well, we're currently sat on a trend line. We've got some kind of fib just below it. One option, if it breaks and closes below the trend line, then your normal plan is you look for a pullback, perhaps all the way to this 98.60 area with a view to a short. But just be mindful of the fact that the BOJ could at any time step in and weaken the currency. If it gets down here, anywhere down here this week, I would definitely be interested for a counter trend long back up. The final option is if the BOJ get involved and it breaks above this 98.66, then pulls back, then I would look for a long. There is, again, you need to check your calendars. There is a lot of Japanese news this week, including the press conference on Friday. So you need to be very careful with it. The BAG, as I say, could dive in there. Euro yen, previous weeks I was looking for a pullback to 132.00. Still an area of interest. Prefer the Aussie Dollar yen this week out of the three yens. If price pulls back to 90, we've got these fibs in the area, 1561.8 in the area. We've got the Bollinger Bands are closing up at the moment, which suggests liquidity drying up. We've had a 5-8 cross. A lot going on here on this chart, but if price pulls back to 90, I will be interested to long. If it breaks and closes below 90, change your plan, you start thinking of a short. Finally, the dear old CAD. The CAD, I said a few weeks ago, we were looking for a long here. It did work initially and then FOMC killed it. Well, it did it again last week, only 40-50 pips. But the reason it's done it, it was major previous support and resistance. Lots of things going on in the area. That was a nice, simple trade last week. And I will continue to take longs at this area until or unless it breaks. If it breaks, I then need it to break this weekly 55 EMA, then a pullback for a short. But this area at the moment is key. And if it's not broke, don't fix it. It's worked a few times recently. It worked back here as well. And previous to that, it was resistance. So this is the key area for me on the CAD. So the important thing is watch your calendars. Monday is a fairly light day, but it depends on the reaction to events over the weekend. As I said, we had this Italian government in shambles again. And we've got all this nonsense going on with the Democrats and the Republicans in the US. But Monday scheduled, it should be fairly light. Tuesday we have a bit of European news, but the main thing on Tuesday is the Aussie dollar cash rate, interest rate news. That could rock the Aussie dollar in either direction, and the statement. Wednesday it starts to get scary, and Wednesday I will be out of the markets, as is always my plan on NFP week. We have a lot of European news. You've got more Aussie dollar news overnight. You've then got the European news and the press conference. This press conference can rock the market hundreds and hundreds of pips, just like the FOMC did the other week. So I never ever trade around this time. You also at the same time have ADP non-farm employment. So that is also US job news. Thursday, if I've not made any money by Thursday, I might have a go on Thursday because it is a fairly light scheduled news day. But Friday, walk, run, anything but Forex. You've got this BOJ press conference. If they say something that suggests intervention, then it could shoot the yen back up, as just discussed. And then, of course, you've got non-farm payrolls, and you've also got FOMC people speaking. So definitely not a day to trade, in my opinion. Okay, have a good week. Catch you later.